Today's video is focused on how to read what is on my screen right now. Like, what does this even mean? Why is it so important to people, and why are people's life savings in a candlestick? Day trading is buying securities at a discount and selling it at a premium. Essentially, that's all it is. So we want to buy low and sell high, and we want to buy high and sell low, because we can make money both ways in trading. Okay, we could do calls, which we think the market will go up, aka long, or we could do puts, meaning we think the market's going to go down, aka going short. Now, here's some terminology that you should brush up on. Bullish means price will go up. Think of like a bull going like with his bull horns going up. And think of bear as, shoot, bear down, homie, type. Okay, now consolidation is something like this. You'll see like an accordion pattern or like a barcode, basically meaning prices going sideways. Okay, now that we have that out the way, let's get into what I'm actually looking at and where to go to first. So what you want to do is type in tradingview.com and it will pull up all of these charts. Actually, let me just pull it up. There we go. So you'll enter here, type in whatever ticker symbol that you want. All right, currently I'm looking at QQQ, which is an ETF, basically a basket of stocks all into one stock, so like a mega stock. Okay, and you can click right here where it says Invest QQQ Trust Series, and you can look at literally all the stocks that they hold. So this is mainly a tech-based ETF. So you have Nvidia, Apple, Microsoft, Amazon, Meta. You get the point. Okay, so this is all. This is why people say invest in ETFs, because you're kind of investing in everything. All right. So let's learn how to read a candlestick. So let's zoom in here. Actually, let's zoom out so we have a better understanding of how to read charts. All right. Now, candlesticks are telling a story about the price action. So we can see here 609.65. That means one share of a QQQ is $609.65. All right. Now, during the day, this does fluctuate, and what we're doing is day trading. We are trading this fluctuation in price. That's how we make our money. Boom, bam. All right. So you have blue candles and you have black candles. If I go to defaults, it's going to look like this. Actually, let's go to defaults so you guys will know what it looks like. You'll see green and you'll see red. And for the purpose of the video, I'll do it in this color. Actually, no, I'm not. I'm going to do it my way. All right. So you see a green and you see red. Green equals up. Red equals down. Okay. Now, I like my candles blue and I like them black. I don't like seeing red. That's just me personally. So an up candle is going to look something like this. Maybe some wicks up here, wicks down here. And a down candle is going to look the same, but in red. All right, so you'll see something like that and something like that. Now, here's how to read these candlesticks. Price opens at the bottom of this box right here. This is the opening. At some point, price also came down here. This is what a wick means, but because it didn't fully close below here, it just left a wick. Boom. It's showing you that price came down here at one time, because candlesticks are telling a story of where price went at the end of the day. The day is going to end. Okay, so price also came all the way up here as well. So you can see price came a little bit up here with this candle, okay? But it didn't close until the closure of this box here. So we call this the close. How do we know it's going to be a green or how do we know it's going to be a green or a red candle, or in my case a blue or a black candle? If price opens higher, if price opens and it closes higher than it opened, it's a green candle or a blue candle. I'm going to say blue candle from now on. If price closes lower than it opened, okay, in this case here, so price opens, and once this click is going to actually start clicking, because it's like, oh wait, like the only difference between a green and a red candle is the fact that, okay, price opened and closed above the opening price, so it's green. And since price opened here and closed below the opening price, it's red. Like, it's that simple. It's literally that simple. Okay? All right. Let's get this all off my screen. Now, this is applicable on every single time frame. So I'm on the 1 monthly chart, so this represents 1 month of price action. So each candle is 1 month worth of price action. Each month is worth one. Each candle is worth 1 month of price fluctuation. Okay, and this is the same thing with the 1 minute, the 2 minute, 3 minute, the 5 minute. It's the same applicable thing. Okay, so we see. I just want to make sure we're just very clear on this. We're gonna do our up candles and then we're gonna do our down candles over here. All right. I'm gonna zoom all the way in. Okay, so price opens at the open of this box. All right, that's the open. If you know what, let's label it. Open. All right, and we see a baby wick. You see that little like nub, that little nipple? That's a wick. So that means price came down here, but because it didn't close, it's not valid. It didn't, like, it's just a wick. Okay, and same thing with this right here. That means price came up here, but it didn't close until the closure of this box. So this would be our close right here. Boom, and we'll just label that close. Okay, that should be pretty simple. Capiche? Capiche. All right, let's remove that. Now let's do a candle going to the downside. So it's the literal exact opposite, bro. So the opening price is at the top of the box. All right, so that means price opened right here. Open. At some point, price came up here as well, but since it didn't close right there, it only left a wick. That's all. It's just telling the story of where price went. Price also came down here, but since it didn't close, it left a wick. The closure is at the closure of this box. The fulfillment of the bottom of that box is the closure. Okay? Boom. So we call that close. Oh. So we call that close. It's that simple. It's how to read a candlestick. And like I said, this is applicable on every single time frame. You don't really need the one, bro. We're not going to be watching 1 second type price action. I'm not gonna lie. So, literally, 1 minute, 2 minute, 3 minute, you could use this on all the way up to 12 months, bro. Same applicable situations. Okay. We see. We're gonna do which candle should we do? Holy moly. This is a very great example right here. This candle. We see price opens at the bottom of the box. At some point, it came all the way down here. Crazy. Okay? And at some point, it came up here as well. Right? But it didn't close until right here. And we can see, hold on. Let's delete all this. And we can see, since we are on the 12 months, what's today? February 6th, 2026. So we have 10 months and 25 days until this next candle closes, right? Because I'm on the 12 months. So every 12 months, this candle closes, right? This is all this is doing is representing where price is going. It's just telling a story. That's it. That's candlesticks. Hope you guys enjoyed this.